Good afternoon, everyone. This is Josh Mindlin here at Chaikin Analytics, and I'd like to welcome you to our presentation of Spot the Best Stocks, Marc Chaikin's Blueprint for Options and Swing Trading. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics. As a reminder, this webinar is being recorded and a copy will be sent to all registrants. Please submit your questions via the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. Chaikin Analytics is not registered as a broker-dealer or investment advisor, either with the U.S. Securities and Exchange Commission or with any state securities regulatory authority. Chaikin Analytics is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. Before we get started, we have a special guest today with us, Larry McMillan, the founder of OptionStrategist.com. Larry has over 35 years of experience trading options and is also well known for his educational option books and option newsletters. His most popular publication, Options as a Strategic Investment, is one of the best-selling option books of all time. Now, to get us started, here's Larry McMillan.
Thanks, Josh. Can you hear me okay? I didn't really see a microphone test, but I think it looks like it's heading through there. Yeah, I'm just going to introduce Marc. Marc and I go way back to the beginning of option trading almost. There's not too many of us left here that are still trading from those early days, but we both are. Marc has built a good system based on technical analysis, which is what I totally agree with. And he's got a long array of credentials. He owned his own brokerage firm. He ran an option department. That was tough enough in those days, still by itself. But as you'll see when he gives the seminar here, you're gonna find some very useful indicators, and hopefully you'll be able to make some money from them. So without further ado, let me bring Marc in.
Larry, thank you very much, and welcome everybody. We've got a big turnout today, and that's good because we've got some very timely information that will help you during earnings season, which started in a meaningful way today when the major banks reported. And then right at the end of the webinar, after we talk about how you can make money during earnings season, we're going to make you a very special offer. So please stay with us. My background, as Larry said, goes back a long way, 50 years on Wall Street. 45 years using technical analysis, but always in conjunction with fundamentals. And along the way, I headed the options department at a regional firm called Tucker Anthony and R.L. Day. That's where I met Larry. Interesting fact, 95% of the traders lost money. We had 22 branches, tens of thousands of options traders. And I'm going to zero in on exactly why they lost money and how we help you solve that problem. Along the way, I've been mentored some very smart and successful institutional investors. Some of them were colleagues, some of them were clients. They all had different styles and different time horizons. And the reason that's important is because everything I learned from them was distilled down in a one-year research project that culminated in September of 2010 into the Chaikin Power Gauge rating. I really wanted to go way beyond technical analysis because I think fundamentals are so important for traders. And so I came out of retirement in 2009, started Chaikin Analytics, and in a one-year research project built the Chaikin Power Gauge rating. It's the culmination of my life's work. I'm going to share with you the Power Gauge and what's in it, so you're going to realize that you don't have to do the fundamental research, but you can incorporate fundamentals into your trading. So in the next 45 minutes, you're going to discover 5 keys to profitable option and swing trading. Our fundamental stock rating is your directional edge. That's what was missing when I was at Tucker Anthony, trying to help thousands of options traders make money on a consistent basis. We're going to look at how important it is that a stock be outperforming the market if you're trading from the long side, or underperforming the market if you're putting on put positions. I'm going to show you how to use institutional buying and selling pressure in the form of Chaikin money flow, which has been in the market for 35 years, to improve your trading, show you how to play good defense, and then finally how to profit with options during earnings season. So I'd like to start the webinar off with a question. Are you thinking about a bear market? Are you listening to some of the talking heads on CNBC who have been trotted out there just to create a little controversy. Josh is putting up a poll here. So Josh, why don't you show the folks what you want them to do?
Poll is up. Results are coming in. And Mark, I made it so that you can vote too.
I know. I saw that. Thank you.
All right. And we will publish these now so everybody can see it. We got a lot coming in. About 65% of people. Here you go.
All right.
Bullish.
Well,
65 are bullish.
This is a much more optimistic group than we've had recently. Larry, do you want to weigh in and tell us how you voted?
I voted bullish. All of our indicators are positive right now until so we see some break in the trend. The trend is up.
I agree 100%. Now, what's interesting is we've done this poll a number of times. We have one partner who does macroeconomic work. He's followed by a lot of the advisors and brokers, professionals, if you will. He's been very bearish. And guess what? When we did that poll, when he was sponsoring a webinar, 52% of the people were bearish. What that tells me is we're all influenced by the people that we respect and listen to. So it's important that you listen to the right people, but also have an independent voice. So let's take a look at what Larry was talking about. This is a one-year chart of the SPY. This is the mirror of the S&P 500. It's the most actively traded instrument in the US markets. A lot of options traders use this. You can do strategies, weekly, monthly, traditional options. So what are we looking at here? Well, we're looking at a market that's broken through the upper trend channel. Extremely bullish since we bottomed out in August. And our go-to indicator for 35 years has been Chaikin money flow. It measures institutional buying and selling, looks back over 21 days. It's based on where a stock or an ETF closes in its range for the day versus the volume. It was something that I used and built on the shoulders of people like Larry Williams and Joe Granville, David Bastian, who did the original research in supply and demand. So what do we see here? Well, we see the market making new all-time highs. And it's not just the large caps, it's the small caps. It's the transportations, it's the Dow. Everything's making new highs. And Chaikin money flow is telling you that the institutions are still piling in because institutions use the SPY to get instant exposure. You've got a lot of hedge funds who have been leaning the wrong way. If they want to get equity exposure on the long side, what do? They'll buy the SPY if they're looking at large caps. So everything here looks bullish to me. Now, when you break out above an upper channel, that's both good and not so good. The good news is rarely do you get a major correction starting from a move like that. And even pullbacks are hard to come by, and we've been seeing that now in the last week or so. The S&P 500 trading in a very narrow range and very, very small pullbacks, if any. So it's important to ignore the headlines and realize that earnings move markets. So here's a headline going back to March of 2017. Caution signals are blinking for the Trump bull market. Well, we all know what's happened since March. We've gone on to make significant new highs, up over 10, 12% in the S&P, even more in some of the aggressive technology indices, and other name people. Paul Tudor Jones, famous hedge fund manager, successful 25-year track record. Bill Gross at PIMCO. Jeff Gundlach, one of the best bond managers in the world, has been bearish on stocks for 2 years. You know, perhaps he should just stick to bonds, because if you've been listening to him about the stock market, you've been on the sidelines looking for a correction that's never happened. So what does move the market, and what do you need to know to make money as a swing trader or an options trader? Got to know the direction of the market. Well, the direction of the market is up right now. It's important to know the trend of corporate earnings, and corporate earnings are going to be very, very positive in these fourth quarter reports that started coming out today. More importantly, revenues are going to beat Wall Street estimates. It's also important to know the trend of interest rates, because they affect the financial sector, a major segment of the market. They also affect small caps. So the trend of interest rates has started moving back up again. And the Fed has told us pretty plainly yesterday that they're going to raise interest rates again in December. This is good for the financial stocks. It's also good for small cap stocks. And then most importantly, if you're an options trader, is stock selection. So after all of this, if you're still bearish on the market, here's a trade you can put on. High probability trade comes from a module called Options Play that we've embedded and licensed in Chaikin Analytics. This is a bearish put spread on the SPY. You buy the 255 put, it expires on November 24th. You sell the 249 put against it. That's a 6-point spread. Cost of that trade, $123. If the S&P 500 drops 2.5% between now and November 24th, almost a 400% profit potential. It's also a way to hedge a portfolio. This is a way to hedge $25,000 worth of a long portfolio. So if you've got $250,000 in your 401k plan, you're nervous about some event relative to Iran or North Korea, it's a very inexpensive way for $1,230 to hedge $250,000 worth of the stock. But I'm putting this up here, not recommending it because we are bullish, but just to show you how easy it is to implement a bearish strategy, a very simple, methodical, cost-effective way. And Options Play rates this 206 with a green check mark. That's about as good a risk-reward ratio as you can generate in an index options trade. Now, we've talked about market interest rates, vertical put spreads. This all adds up to an awful lot of information, and that's the biggest problem we have as traders: information overload. Too much information to process, and if you want to bring fundamentals into the equation, then you're really going to be overwhelmed. So the Chaikin Power Gauge rating was created, as I said, in a one-year research project to do the fundamental heavy lifting for you, to cut through the clutter of all that fundamental data that's on the right there that I couldn't make a decision on, and distill it down to the gauge that's on the left. Goes from very bearish to very bullish, easy to understand. As you'll see, 4 primary factors, 20 sub-factors. It does an awful lot of number crunching. And so our solution to the information overload problem is Chaikin Analytics, because the centerpiece of Chaikin Analytics is the fundamentally driven multi-factor power gauge rating. Now, we've been very fortunate to get some good press, to have partners like Larry McMillan from the Option Strategist, and some of our old institutional clients from the brokerage firm that we sold to Reuters have come back and are starting to use the same product that you're going to be seeing examples of: Paulson Hedge Funds, Soros Hedge Fund, Fidelity Investments. So lots of proof that this is being adopted and that it works. Barron's called us the top quantitative research site on Wall Street, and as you'll see at the end of the presentation, we won the Benziga FinTech Award for Best Ideas Platform. Now, I said earlier on that traders need an edge. That's why 95% of the people who were trading options in the late 70s and early 80s at Tucker Anthony lost money. They didn't understand the importance of a directional edge. They didn't understand how important it was to really have a strong opinion about where a stock was headed if you wanted to make money in puts or calls. It seems so obvious, but these were people making wild bets, using short duration options, out of the money, doing all the wrong things in spite of the education that we tried to hand out to them. So the Chaikin Power Gauge rating is your directional edge. We combine fundamentals with technicals into a quantitative model that's easy to understand, readily accessible, and then give you Chaikin buy and sell signals for better exits and entries. All of that is summarized in this pyramid. Successful investing needs a disciplined methodology. So at the top of the pyramid is the Power Gauge rating. It's our go-to fundamental indicator. We also feel that industry group and sector relative strength is very important. Studies by Zacks, Investors Business Daily, S&P have all documented the fact that industry group trends are very important, and I'll get into that in just a couple of minutes. At the bottom of the period, just two technical indicators. Chaikin money flow, which has been available for 35 years on every online brokerage platform. It's on stockcharts.com, Reuters, Bloomberg. Pros use it, individuals use it. It works. And then Chaikin relative strength, our way of looking whether a stock is outperforming or underperforming the market. And then right in the middle of the pyramid, that sweet spot, Chaikin buy and sell signals. One of my favorite songs coming out of New Orleans, Dr. John, I've been in the right place, but it must have been the wrong time. That's why signals are so important. You can have the right stock in your radar screen, but if you don't get in at the right time, probably going to be a losing trade, and that's very damaging psychologically. So let's start off with two patterns that really show you the best of Chaikin. If you're looking for a stock to buy, the ideal stock is what we call a classic Chaikin bull. Power gauge rating is bullish, meaning the fundamentals are well positioned for that stock. It's outperforming the market. That's how you get price acceleration. And Chaikin money flow is strong, telling you that the institutions are buying the stock. And here's a classic example. Applied Materials, semiconductor equipment manufacturer. Power gauge rating is a ribbon at the bottom of this one-year chart. Normally goes from red to yellow to green. In this case, it's been virtually green the whole time. Right above that, our proprietary relative strength. We've converted relative strength that looks back over 6 months of performance of the stock to an index, in this case the S&P, and we've converted it into a heat map. You can go to Investors Business Daily and find this as a number from 1 to 99, but we have a unique twist on relative strength. Not only is the presentation different, but the calculation is different because this persists over time. So what we look for is for the market to agree with the model, because no matter how good your fundamental research is, if the market doesn't agree with you, at best you're early, and at worst you're on the wrong end of a trade, wondering why it's not working out. And then Chaikin money flow, which is our go-to supply-demand indicator, tells you if the institutions are buying the stock. So we saw that in the SPY, a lot of accumulation. And then look at this 6-month period when AMAT was going from 32 to 47. Institutions were buying it even when it dipped down over a 2 to 3 week period and got oversold. And then we've got our relative strength buy signals on the screen. It's one of the 6 pairs. We also color code earnings to show you whether a company beat or disappointed Wall Street estimates. This is absolutely critical to making money, not just during earnings season, but all year. Find the stocks with a pattern of positive earnings surprises. We'll show you how to do that and why that's so important. So the relative strength signal is a powerful signal for options and swing traders. It's accurate about 70% of the time. It only happens in a stock that's outperforming the market, which dips under its 21-day average and then moves back above the 21-day average. The duration of this signal is 4 to 8 weeks. That's what makes it so good for options trading and swing trading. You're not under the gun time-wise. Now, there are some wonderful strategies. I know Larry employs them using weekly options to generate income or to make informed bets. But here's an indicator that can help you find trades where you can breathe a little and let the trade breathe and not be worried about premium erosion because an expiration is looking you in the face. And you see these signals and how wonderful they would have been in that 4 to 8 week time horizon. Now, it's nice to know that there's a great pattern out there, but how do you find it? Well, in a webinar that we did in May, we screened using the screener in Chaikin Analytics 4 classic bulls. We started with the Russell 3000, required that the rating be very bullish, not just bullish, but very bullish. Look for strong money flow and relative strength. So there's our classic Chaikin bull pattern in large and mid-cap stocks with options. And then one additional filter. we wanted the company to have a history of positive earnings surprises. That's why we stress that over and over again on the webinar. Only 13 stocks 4.5 months ago passed through the screen. In that period, the S&P 500 has been up 4%. The average of these classic bulls up almost 18%. This is powerful information, whether you're trading options to own a week or 10 days or 4 to 8 weeks. Powerful information. Stocks that meet all the tests give you a high probability, give you that directional edge. That's what we're going to be talking about on this webinar, using a lot of examples to reinforce it, because I'm a firm believer that if I can show you the way it should be done and the way I do it in my weekly market letter, that you'll be able to do it yourself. Now, the opposite of the classic Chaikin bull is the classic Chaikin bear. Power gauge is bearish, so the fundamentals are working against you. Stock is underperforming the market, and Chaikin money flow is red, not green, telling you that the institutions are selling. So we typically end up with a poster child that we use over and over again for 6 to 9 to 12 months because these things persist. So our poster child for the last 9 months has been Under Armour, a very, very beloved stock by the hedge funds and the brokerage firms. It's now a fallen angel. And if you didn't spot the institutional selling and the power gauge turning bearish and the stock underperforming the market, you could have been on the wrong side of the trade. But more importantly, you missed the opportunity to buy put options on these relative strength sell signals. Now, we had another set of sell signals here just coming into yesterday and today, and the stock was down 2% on a day when the market was flat. So down from 40 to 15 since the Chaikin power gauge turned bearish. And notice that when the institutions are selling and you get negative earnings surprises, gap down, big down move, another down move. They tend to repeat over and over and over again. So these are the stocks you want to avoid on the long side, but looking for put or short sell opportunities. So all of this starts with the Chaikin power gauge rating. The display is simple, but under the surface, there's a lot of number crunching going on, as you'll see in a minute. So what I like to say is that the Chaikin power gauge rating is like a Ferrari. It's like a Chevrolet with a Ferrari engine under the hood. And during earnings season, it can be your GPS. It can help you navigate the volatility that we all see during earnings season. Now, the Chaikin power gauge rating, which I built in 2010, is composed of 4 primary factors: value, growth, technicals, and sentiment. And within each of those factors, 5 sub-factors. So the value metrics are 35% of the model. And here we're building on what Warren Buffett and Graham and Dodd, the great value investors, have done over the years. But we also have more sensitive factors. I boxed 2 of them. Earnings surprise, which we keep talking about. You get a earnings surprise when a company reports, as Citicorp did this morning, better than expected earnings. JP Morgan as well. And what I learned when I was at Drexel Burnham in the mid-'80s is earnings surprises come in bunches. George Douglas, who had their quantitative database, did the original research in earnings surprise. So what he taught me, as one of my mentors, was earnings surprises come in bunches. There's never just one of them. And more importantly, they lead Wall Street analysts to raise or lower their estimates. So there's this virtuous circle that goes on where companies disappoint or report better than expected earnings. Analysts then adjust their estimates. Institutions follow the analysts. It's been this way since 50 years of experience that I've had on Wall Street. And then finally, we're boxing industry group relative strength, because we're going to delve into that and show you how by zeroing in on strong sectors and industry groups, you can find the best stocks to trade. Zeroing in on weak groups, you can find the stocks to be short or use puts to make money on the downside. So what's been the performance of the power gauge rating? We use the Russell 3000 as our core universe. In 2016, the average very bullish stock in the Chaikin power gauge system in the Russell 3000 up 32%. The average very bearish stock up 9.5%. So if you're trading from the long side, ask yourself the question, are your odds better by trading a very bearish stock that's up 9.5% on average, or a very bullish stock that's up 32%? This is the directional edge that we give options traders. Now in 2015, it was even more dramatic because the very bearish stocks in the Russell 3000 down 18%. These were the energy stocks, fracking stocks like Range Resources, Kinder Morgan. Anything that was a small cap stock typically was in a bear market in 2015. Very bullish stocks, flat, which is pretty much what the averages did. So in 2015, you really wanted to be short or have put positions in the energy complex, and we help people do that. So one final proof point, we have a partnership with Nasdaq, which has led to New York Life, largest mutual insurance company in America, licensing 3 Nasdaq Chaikin indices that we created initially in 2014. These are buy and hold indexes that are rebalanced annually, and New York Life's Index IQ subsidiary licensed them in February. And the first exchange-traded fund based on the Nasdaq Chaikin Small Cap Index was launched in May. This is not a recommendation to buy it. It is the most successful multi-factor ETF launch and the 3rd most successful ETF launch of 2017 out of 105 new ETFs, 250 million in assets being managed with the same intellectual property, the same fundamental factors that we're going to be teaching you on this webinar. So a lot of proof there. And Jim Cramer has become a believer. He's always talked about Chaikin money flow on Mad Money, but now he's gotten interested in the power gauge. So he's invited me to be the featured speaker at a live event that he's sponsoring. It's a paid live event at the Harvard Club in New York on the 28th of October. And I'm blessed to be in good company. John Najarian, who's been a partner of ours, J.J. Kinahan from TD Ameritrade, a lot of other top contributors. So if you're in the New York area and you want to get an in-depth view in this symposium for active investors, please join us. Now, 3 key indicators that lead to 3 important takeaways. First one we call the dynamic duo, then spotting personality change, and finally stealth accumulation and distribution. And this is a way of taking these indicators and putting a little wrapper around them so you can understand them in a very sort of non-threatening way. So here's the dynamic duo. It's the Chaikin power gauge rating for your fundamental direction and Chaikin relative strength to tell you whether a stock is outperforming the market and the market agrees with your fundamental view. So the dynamic duo finds big winners and losers with one caveat, that relative strength stands alone as a bullish or bearish indicator. Now what we mean by that is a stock can be strong without fundamental backing. These are typically high momentum stocks, captured the fancy of Wall Street. Under Armour was one of them, 3D printing stocks. Tesla's another example of it. But if the fundamentals aren't supporting it, you're on a high wire without a safety net. And as we'll see, when you fall off that high wire, it can be pretty painful. So let's look at the second concept, which is, I think, the key to making and keeping profit, and that's spotting personality changes. We define a personality change as a stock that's been outperforming the market, so the relative strength indicator is green, that begins to underperform the market, or vice versa. Stock underperforming begins to outperform. So here's an example of a bullish personality change. Biotech stocks have been on a tear for the last 3 months. Large cap biotech stocks have really created incredible upside performance. So Gilead, one of my four horsemen of the large cap biotechs, Amgen, Biogen, Celgene, and Gilead, was in a downtrend. The power gauge was bullish at times, but the market was not agreeing with it. And then back here in July, bullish personality change. Now, what I look for after a bullish personality change is what I call a low risk buy point. In this case, it's our oversold buy. I owe this one to another Larry Williams, who was a long-distance mentor to me when I was creating Chaikin Money Flow, because he did some of the original research in supply and demand, accumulation, distribution. So what is an oversold buy? Stock with a bullish power gauge rating makes an 8-day low and gets oversold. It's a really simple pattern, works about 66% of the time, has a much shorter time horizon than the relative strength, 5 to 10 trading days. So it's for more aggressive, shorter term options and swing trading. And by the way, all 6 of the buy and sell signals are described on our website. Whether you're a subscriber or just a visitor, you can go to the website, chaikinanalytics.com, and see the conceptuals behind these 6 pairs of buy and sell signals. The key to realize is that they're all filtered either by relative strength or by the power gauge rating. So that's your directional edge. So notice what a wonderful entry point that was after the bullish personality change. Some nice accumulation. Get in at 72 on the way to 86, pulls back, and then you got another buy signal here on this pullback just about a week and a half ago to the 79 level, rallies back up to 84 almost immediately. Now, on the downside, a bearish personality change is really important, because if you're long that stock and you don't spot the personality change, you put your feet in cement, which all of us have done in our careers on Wall Street. You get stubborn, you stay with a stock like Under Armour, not recognizing that this is a dangerous place to be. But here's a drug stock, Tesoro, bearish personality change. Back in March, the power gauge goes bearish. And in a bull market making new all-time highs where biotech is making new highs, look at this stock. It's dropped from 150 all the way to 110. Along the way, overbought sell signals on a new 8-day high, giving you the opportunity to either get out of a stale position or buy puts. Now, we just had a bearish personality change in Anthem Health. This has been one of our favorite stocks for 2 years. Medicare provider. There's some unsettling news with President Trump by executive order disrupting the Affordable Care Act. Let's look at the technicals here. So we had the bearish personality change in a stock that's been outperforming the market since the presidential election in November. It rallied up to our long-term trend line. That's a triple smooth 200-day moving average. And Chaikin Money Flow stayed red. This is a pattern we're going to show you in a minute. So this may be the time to take your profits and leave the playing field to some other people in some of these healthcare stocks. But Anthem particularly, I wanted to show you something that's very timely, not just something that happened 6 months ago. All the ingredients to encourage you to get out of the stock. Now, you might want to buy a put option on it, but at a minimum, if you're long the stock around this 190 level, time to leave the party. Money flow is weak. It's under the long-term trend line. It's gotten overbought, and it's underperforming the market. The power gauge is neutral, and so this is a great place to take profits, like to solve the problem. I think the biggest problem that our customer support people deal with is when to sell. So here's an example of how I find sell candidates. Now, in SunEdison, it was really imperative that you sell when all these things took place. Now, in SunEdison, the power gauge turned bearish in July. This is 2015. A darling of the hedge funds, solar energy stock. Merrill Lynch loved it. Buy recommendation at 28. Look at the institutional selling, negative earnings surprises, bearish personality change. All of that took place in the 24-25 area. And then along the way, periodic rallies where you could have put on put positions, because this chart ends in April of 2016 when the company filed for bankruptcy. Now, Merrill Lynch did put out a sell recommendation on this in February at $3 down from 28. That's why you need independent, objective tools to help you with your options trading. Larry McMillan and the Option Strategist obviously gives you spoon-fed great ideas. If you want to do trades outside the universe that he's following, you need tools like this. And we got this wonderful testimonial from a Merrill Lynch advisor in Philadelphia who saw us at a trade show. And he looked at that chart and he said, if I had only had Chaikin, I could have avoided a lot of pain and saved a lot of money for myself and my clients, because I averaged down on Sun Edison at 15 because Merrill Lynch was still recommending the stock. Not a knock on Merrill Lynch. Could find any research from Wall Street firms that show that even the professionals put their feet in cement and don't spot that personality change. But you can do it with indicators like this. Now, the third pattern that I want to show you is really a moneymaker. We call it the secret sell signal that 95% of traders never see. It's a bearish Chaikin money flow sell alert. Remember, this indicator has been in the marketplace for 35 years. So here's a chart of advanced auto parts. This is from our iPad app. The other charts are from our browser-based desktop. So advanced auto parts was a momentum stock here for a couple of months. And it equaled its old high right up here, near the upper volatility band, and then go down to the money flow, and you'll see that instead of going green, which is what money flow normally does, it stayed red because the institutions were selling. Institutions need volume to get out of their positions. So when they see a stock rally to new highs, maybe it's the public buying it, or maybe there's been a news story, smart money is selling. It's one of the only indicators I know that help you get out of a stock near the high with confidence that you're not leaving a lot on the table. And then along the way, the power gauge turned bearish. It started underperforming the classic Chaikin bull pattern, dynamic duo weak, but that money flow sell alert, as we'll see right at the end of the webinar, crops up over and over and over again. Now, you get a similar pattern on the buy side. Notice this persistent accumulation in this wonderful small cap stock, Johnson Outdoor. It's the largest weighting in our equally weighted ETF, so that put me onto this one. But power gauge turned bearish. It started outperforming the market. There's your bullish personality change. And the institutions, or smart money in this case, were buying the stock. So when a stock, and we saw this with AMAT, sells down for 2 weeks and gets oversold, or goes sideways for a month, and money flow stays green or above the zero line, you can find this on stockcharts.com and every one of your online brokerage platforms, that's a sign that the institutions are accumulating the stock, not contributing to the weakness. So you want to be there with them buying the stock. If you get a buy signal, it's easy. Sometimes all you're going to get is a pullback to the 21-day average. But just keep this pattern indelible in your mind. It's really powerful. It's worked for 35 years. So you've got the bearish money flow sell alert, and you've got this persistent accumulation pattern where you can be on the right side with the institutional buyers. Now, everything we've been talking about is what Warren Buffett calls the fat pitch. We call it the ideal setup. Warren Buffett has said they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. He calls it the fat pitch. Now, the one missing ingredient is the timing, which are Chaikin buy and sell signals. So 6 pairs, we've seen them in action. But again, how do you find them? Well, we have dashboard alerts in Chaikin Analytics. So I took this screenshot for a webinar I did on August 10th. In a list of stocks that I follow called My Stocks, there were a number of buy and sell signals that day. I keyed in on Intuitive Surgical because it's volatile, and this was a relative strength buy signal at 943. I could have just as easily gone toward Boeing, Michael Kors. And then on the sell side, Bed Bath & Beyond, a relative strength sell signal at 2978. So let's see how they worked out. Intuitive Surgical makes surgical instruments. There's where that buy signal came. It's actually split 3 for 1. So that was about 914. It moved up from about 315 all the way to 370. So really nice trade, great options position. The key is follow the discipline of the signals, because any entry point that's using a discipline that's based on proven analytics is better than trading on your emotions. Now it gets really interesting with Bed Bath & Beyond. Here's where that sell signal came in. It had already had a positive or a negative earnings surprise and a spike down preceding that, but then you rallied up, got your relative strength sell signal. The stock was around 29 and 78, dropped immediately to 26, and then right ahead of the next earnings report, you got a second chance. The stock rallied again right into the earnings report, which happens a lot. Opportunity to put on a put position, negative earnings surprise, the stock drops from 29 to 22, and then today down an additional 4%, making another new 52-week low. These patterns repeat over and over and over again. So follow the discipline and improve your performance and your win-loss ratio. Now, we talked earlier about how important industry group strength was, so I'm going to show you how to use sectors and industry groups to find big winners. This is what I do every week when I write my weekly market letter. We analyze the 10 select spider sector ETFs, which is how Wall Street slices and dices the S&P 500 index. And we use something unique called the power bar that I'm going to show you in a second. We drill down on strong and weak sectors to find the best stocks or the worst stocks in the weak sectors to trade. And then we look at industry groups in the same way. So here is the rationale behind all this. If you're trading from the long side in strong sectors and industry groups, you're giving yourself a tailwind. It equals better profits on the long side. On the other hand, weak sectors and industry groups will give you headwinds, like crossing the wrong way on a one-way street or trying to row against the tide. If you're trying to trade stocks from the long side that are in weak sectors and industry groups, you're just bucking the trend. Better to go on the short side where you can take advantage of that. So this is a blow up of our power bars for the 10 select spider sector ETFs. A lot of people trade these. In fact, if you trade these at all, please type a big T for trade. These are ETFs that are very liquid. And Josh, if you're listening, tell me how many T's we're seeing in there. Who trades the XLK for tech or the XLF for finance?
We got a couple coming in. One, no, but we do have a couple T's for trading. You can put it into the Q&A window, folks.
So there are people who trade these, but we've got an even more powerful way to use this. So we rank them by the number of stocks with bullish versus bearish power gauge ratings. So this is a look under the hood. Most people look at sectors using price momentum. We do that as well. But this is a look under the hood at what's really going on. Which sectors and industry groups have the best potential based on the stocks in that ETF. So right at the top of the list, finance, 32 bullish, 1 bearish. That's important because the major banks started reporting today. Then materials, technology, I'm going to zero in on that. At the bottom of the list, energy, just 1 large cap energy stock with a bullish rating, only 1 real estate stock with a bullish rating. This is where the damage has been done on the downside, consumer staples as well. So in spite of this big rally in crude oil and energy stocks in general, still only 1 stock with a bullish rating. This has been true since late January, as we'll see in a minute. So let's look at the chart of technology. Been very strong for a year. In fact, it's been the strongest sector in the S&P 500. A lot of money has been made in the AMATs and the Lam Researchers of the world. Facebook has been strong. Red Hat, we're going to use a number of these as examples in the balance of the webinar. And notice the accumulation. It's been outperforming the market, but it's also under intense accumulation. So anytime it gets oversold, you want to be looking to buy tech stocks. And we will have a power gauge rating for ETFs by the end of the year. I know a lot of people have been waiting for that. The technical piece is what's been the challenge, which is surprising because I've been a technician for 45 years. This is a little bit like President Trump's comment about healthcare. Who knew that it would be this difficult to pass a healthcare bill? Well, after 45 years of doing technical research, who knew that it would be this difficult to create a technical indicator for ETFs? But we're almost there. Now, here's Lam Research, which looks a lot like Applied Materials. They're both semiconductor equipment manufacturers, making new highs, relative strength buy signals, all the aspects of a classic Chaikin bull, still lots of accumulation going on. Now, I'm a little concerned because tech earnings are coming out starting next week. Micron gave us a clue 3 weeks ago when they reported blowout quarter that tech earnings are going to be very, very good. My concern is there's going to be profit taking like we saw back here in July, because there's been a big run up after the Micron earnings came out in stocks like Applied Material and Lam Research. So they may be borrowing on the strength of the earnings reports that are due out. If there's a whiff of disappointment, that could be fatal. But what we're telling people, we just tweeted on this yesterday, is if you get a big spike up in stocks like Applied Material or Lam Research when they report earnings, as you did in the previous quarter, might be a good place to take profits. Now, Facebook is a stock we recommended as our bullish stock of the week 2 weeks ago in Chaikin Analytics. It had come off and oversold. It was trading at around 170. This is the time of the year when Facebook typically does very well. They've got earnings due out on November 1st. Wall Street's looking for better than expected numbers. Analysts are raising their estimates. But this is a $170 stock. So if you don't have the capital to trade $170 stock in a round lot, you could put on a bullish call spread. So this is what a bullish call spread from our options play ideas module looked like this morning when I was putting together the webinar deck. Options play suggested buying the Facebook 175 call expiring November 24th, so plenty of time after that earnings report comes out on November 1, and selling the 187.50 call against it to reduce your cost. So $383 to control $17,300 worth of Facebook stock for the next 5 weeks. And on an 8% move in the stock, you can make over 200% profit. So nice leverage there. Limited risk. You know what your risk is, $383. You buy the stock at 175 and it starts going against you. Now you've got tough decisions to make. With the options, you don't want to let them go worthless, but you know what your loss is going in. So there's an example of how to use vertical call spreads, which I like. Reducing the cost of the option always makes sense. Gets a good positive score from options play, whereas the outright put buy gets a negative score. Risk reward is usually better in vertical bullish call spreads or bearish put spreads. Now let's look at industry groups. We rank them the same way. So here are the strongest on the left. There's your major banks from the finance sector. There's aerospace and defense from the industrial sector. Very bullish configuration, 28 bullish stocks, 1 bearish. And then on the right hand, the bearish industry groups still dominated by energy, and then consumer staples and soaps and cosmetics, which is part of consumer staples. These are the places to have been on the short side or avoiding the long side. So let's look at a couple of these stocks. In the aerospace defense group, there's a fixation now with rocket stocks. So here's Orbital ATK, bullish personality change all the way back last November. Stock has moved up from 90. It was comfortably sitting around 105, 110. We got a buy signal. This is our money flow buy. And then 2 days later, Northrop Grumman made a bid for them at 130. Instant gratification. Sometimes it's better to be lucky than good, but if you follow the discipline and follow the methodology, you'll get lucky more often than you can imagine. So imagine how good you would have felt if you followed that buy signal, because aerospace defense has been a strong industry group now for 6 months. And then there's a bid for the company. Now, in sympathy with that bid, here's another rocket company, AJRD, small cap stock. I passed it on the way to Los Angeles airport about 3 weeks ago. Buy signal, roughly the same time. And then when the bid for Orbital came out, look what happened. Sympathy buying in other aerospace rocket-oriented stocks pushed AJRD from 28 all the way to 36. So follow the discipline, find strong stocks and strong industry groups and sectors, wait for a buy signal. This is how you make money. You can use options to leverage those trades or just buy the stock outright. Now, one of the 5 steps that we wanted to talk about today was playing good defense. Because playing good defense is important in a bull market, and if you get into a bear market, it's absolutely critical because it's the way that you protect your capital and also turn lemons into lemonade. So good defense can also lead to good offense. And we've been getting the question for the last year, actually, will Chaikin help me in a bear market? Because we've been teaching these methodologies since 2011. We've been in a bull market since 2009. So it's a reasonable question. And my answer is a resounding yes, and it's based on what you're looking at on this chart. Over 90 years ago, Richard Wyckoff, who was a great market strategist, developed this idealized picture of how stocks go down. He also did the accumulation phase. And it's been true for over 100 years. The reason is this is based on human emotion. Pendulum swings from greed to fear and back again. So stocks go into a distribution phase, break down, rally up. And Chaikin Analytics is unwittingly, with our signals and our relative strength, mirroring the Wyckoff patterns that he created over 90 years ago. So in the midst of this bull market, and the answer to the question, will Chaikin help me in a bear market, is the XLE, the Select Spider Sector Energy ETF. These are all the large cap energy stocks in the S&P 500. The ETF peaked at $100 in July of 14, and then we got a bearish personality change in early September. The XLE went from 100 down to 50. Now that's a bear market, 50% down. And the relative strength helped identify it and find stocks like Range Resources and Kinder Morgan, as we'll see in a second, to play from the short side. Now, most of the energy stocks started down in 14. Kinder Morgan, through some financial engineering, I call this levitation, stayed up over 40 until May of 2015. At which point the power gauge turned bearish again, and you got a bearish personality change with institutions selling. All of this took place at around $40. The reason the stock held up is because the Wall Street analysts were fascinated with this roll-up strategy of taking their MLPs and rolling them up into the parent company, and the stock had a 20% yield. At this point, when it was trading at 13, it had a 16% yield. A lot of people stayed with Kinder Morgan, smart people, advisors, professionals, thinking that they could maintain the dividend, which they ultimately had to cut. So wouldn't it have been nice to get out there at 40 or on these rallies up into the 30s? Because these are the kinds of stocks that destroy portfolio returns, and you can turn that on your head and buy put options. And notice that even a put option that was purchased with a stock at 22 down from 42 was a profitable trade. I strongly believe that it's never too late to sell a stock where everything is lined up against it. Under Armour was the other example, from 40 down to 15. Now let's look at the XLE in real time. The previous chart was a 5-year chart. This is a 1-year chart. Same pattern. Late January this year, bearish personality change. In that time period, the XLE dropped 15% as the market was making new all-time highs. Now you've had a huge rally in energy stocks from 62 to 68 on the XLE. That's a 10% rally. Still only one stock where the power gauges turned bullish. So as soon as we saw that bearish personality change, started looking for stocks like Schlumberger, where there was institutional selling, underperforming the market, bearish power gauge. Then you wait for a signal. This one came ahead of the earnings report. Sell signal at about 76. Negative earnings surprise, drops all the way down to 68. Rallies a bit. Another overbought sell signal. Another one before earnings. So over and over again, these patterns repeat. Remember, this one is for shorter term trading, and it works about 2/3 of the time. Now, I promised you that I'd end the webinar by talking about how you can make money on options during earnings season. Earnings season happens 4 times a year: July, October, January, and April. As companies report their quarterly results, we're right at the start of third quarter earnings season. Today, the major banks reported. This will go on for 6 weeks. It's a volatile time in the market, but that volatility creates an opportunity. There's so much speculation in the media around earnings about which stocks are going to beat or miss. You go watch Fast Money, and you see 4 different views from 5 different analysts. So if you have a way to, with some high degree of probability, know which stocks are likely to beat or disappoint, you've got an edge, and that's what the Chaikin Power Gauge does for you. And then you can find the winning options trades, the high risk reward probability trades, using our options play module. So 3 or 4 examples here. In April, in my weekly market letter, I said, stocks are marking time, waiting for earnings season to begin. But here are 3 auto parts retailers to sell on strength. They had all made new 52-week lows, so I was looking for a rally of 2 to 3%, because I hate shorting into a hole. And sure enough, we got it. Then you got a bearish earnings surprise. We triggered a sell signal up there. That's the overbought sell, new 8-day high, bearish power gauge. Negative earnings surprise, the stock spiked down from 150 to 130 and continued all the way down to 100. And the other 2 stocks, AutoZone and O'Reilly, behave in very similar fashion. Now, let's update that advanced auto parts chart. Remember, here's where you had your bearish money flow sell alert up at 170. 150, everything started to break down. There's that sell signal. You had another opportunity. After it dropped to 100, it rallied all the way to 110, a little bit of short covering ahead of the earnings. Negative earnings surprise, and the stock dropped from 105 all the way down to 85. 2 days ago, or 6 days ago, Raymond James, a very, very fine fundamental research firm, lowered their analyst rating from strong buy to market perform. Stock was already down from 170 to 100, and because of that additional selling pressure, the stock is yet again at a new 52-week low. Earlier today, 87.5, down over 2%. You don't have to be late and depend on Wall Street estimates or what you're seeing or hearing on CNBC. Become independent. Have a way to do this yourself so that you can put the odds on your side and sleep better at night. Now, even in the strong tech sector, Seagate, which reports earnings on Monday, October 23rd, had a negative earnings surprise back here 3 months ago before they reported their fourth quarter earnings. We happened to get a sell signal the day earnings were due to be reported after the close. So if you're following the discipline, you could have bought puts with the stock at 39, immediately spiked down to 31.50. Now you've gone sideways with a slight upside bias as you head into the October 23rd earnings report. Is Seagate going to do it again? Well, the analysts are lowering their estimates. So if you see Seagate rally into that earnings report, you can buy a low-cost put position, know what your risk is, and if you get another 20% drop in the stock, you may just be there to benefit from it. Now, Red Hat is an example of a software stock in the technology space where we had a buy signal ahead of an earnings report 2 weeks ago, positive earnings surprise. The stock went from 115 all the way to 120 this morning, 120.75. Just keep following this discipline over and over again. When the power gauge is bullish, the stock's outperforming the market, money flow is bullish, there's your ideal setup. Wait for the signal, do this over and over again, and you're going to have a very, very profitable bottom line at the end of the year. Now, here's a cautionary tale about this earnings season. Citigroup has had a very bullish power gauge rating. It's been underperforming the market. We've had a number of buy signals, and they reported earnings before the opening today. We immediately reflect that on our charts. So anybody who's using Chaikin Analytics saw that their third quarter earnings were $1.42 versus estimates of $1.32. That is bullish, but look what happened. The stock, which had run up to new 52-week highs, saw profit taking on the news. So when I did this chart earlier today, down 2.28%, finished the day down over 3%. So I'm a little bit cautious about how stocks are going to react to positive earnings surprises because there's been so much anticipation built up in tech and in finance. So if you get lucky and you get a positive earnings surprise, don't be shy about taking profits. Now, we also give you the ability to screen for stocks that are due to report earnings in the next week. We also feature that in our Market Insights newsletter on Sunday. I ran this screen to see which stocks with a bearish rating were due to report earnings in the next 5 trading sessions, 13 stocks only. Narrow your focus, look at the charts, wait for a sell signal. You had one in this SCSS today, with the stock then responding by dropping 4%. That sell signal would have been known before the opening, so an opportunity there. But narrow your focus to the stocks that are most likely to give you the best results. This is how we help you do that. And we got this testimonial from GC, a subscriber, 10x return in 5 days. In the 5 business days I've been using Chaikin, I paid for the subscription over tenfold. He was obviously using options. These results are nothing short of outstanding. Please extend my thanks to the whole Chaikin team. And this is really a team effort. 26 of us in Philadelphia dedicated to your success. So here are some weekly recommendations, my bullish or bearish stocks of the week from my weekly Market Insights going back to August. Short sale recommendation on Amazon, 99 to 1,000. It dropped to 931. We closed out our bearish vertical put position. It's rallied back up toward 1,000, waiting to see if it can roll over again. A buy on Kohl's, one of the sort of bricks and mortar retailers that Amazon has been marginalizing, but we're seeing a little turnaround in some of these. So Kohl's, KSS, we made a buy recommendation, 40.10, rallied to 47.44. Now we typically only have one recommendation each week, so we're not cherry picking here. Short sale on Allergan, 233.55, dropped to 201, better than a 15% drop. DR Horton in the home building area, home building stocks are on a tear. 36.90 was the buy recommendation, went to 41.51, and then just a week and a half ago, Facebook at 170.81, trading this morning at 173.05. You saw that put spread that you could put on. So let's look at 2 of these charts as we end the webinar, because I want to walk you through what I was seeing that caused me to recommend them. So here's Allergan. In the strong biotech and drug industry group, Allergan was doing very poorly, way off its 52-week high. And then based on a very, very convoluted news story about selling their patents to a Mohawk Indian tribe in New York State to avoid a patent lawsuit, the stock rallied from 220 to 233. That's when I put out the sell recommendation. Here's why. Overbought sell signal, negative money flow at the upper volatility band, bearish power gauge rating, bearish relative strength. This is Chaikin in action. This is how I do it. And then the stock dropped down to 205 and we closed out the short sale. DR Horton, there's that persistent accumulation that we were looking at. So when it dropped back to the 21-day average. We had already had a buy signal here. I didn't identify it right there. I was into some other recommendation at that point. Thought that was an interesting time to buy the stock. It had just pulled back to 36 and change. Very positive Chaikin money flow. Everything was lined up. Recommended the stock, and it went from 36 to 42. Really nice trade. Probably a good longer term hold because millennials are buying houses again. So we've got a new innovation at Chaikin Analytics. For us, this is a big deal. Benzigo, which is a very good website that gives you news and earnings information, has been sponsoring financial technology awards for 3 years in New York. They're based in Detroit. And this year we were nominated for Best Ideas Platform with 19 other competitors. Chaikin Analytics won, which is a great testimony to our development staff and all of our support people. And we won for our newest innovation that we call our stock discovery engine. In the same way that Spotify finds you music or Netflix finds you movies that you like, and Amazon finds us everything else in life, the stock discovery engine finds you stocks that are similar to something you seeded with. So in this case, I had a bearish rating in July on Starbucks. I typed Starbucks into the symbol entry box of the stock discovery engine, and it gave me, in a split second, 5 other bearish stocks in the food and drug retail wholesale business, including Chipotle, which we've had a bearish rating on since 700. So I immediately checked the chart on Chipotle. Looking back, I saw this money flow sell alert, exact same pattern as advanced auto parts, equaling the old high. Money flow stays negative, but in this time frame, in July, you had just had a momentum breakdown, went below the lower volatility band, and it was just hugging that band, but with terrible money flow. Institutions are still selling the stock. They were back then. It was 395 and it dropped all the way to 300 in almost a straight line. And we made that one of our bearish stocks of the week. So this is how you use Chaikin Analytics, and our newest innovation, our stock discovery engine. If you don't want to do the work, the stock discovery engine will do a lot of the work for you. Just seed it with a bullish stock and you'll get other bullish ideas. Seed it with a bearish stock, you'll get bearish ideas, or swaps. So eBay was one of the swaps that's done quite well. Other stocks in there have done well in addition. So now we've covered the 5 keys to profitable options and swing trading. The question is, how do you benefit from all this? Well, you can try and do all that fundamental work yourself. Go to Investors Business Daily, comb through the charts, or you can subscribe to Chaikin Analytics, which is a proven stock selection system. It incorporates our 20-factor model based on 35 years of experience that I've had working with institutional investors. Includes our stock discovery engine to find ideas that match good quality ideas that your conviction on. Also has the screener and the options play ideas. And Chaikin Analytics for both iPad and desktop normally sells for $2,195 for an annual subscription. You can go to chaikinanalytics.com/blueprint, take advantage of all the functionality that Chaikin offers. But as a special for the options strategist community, because Larry McMillan has been such a good partner of ours, we'd like to take $300 off the list price of $2,195, reducing it as a webinar special to $1,895. Go to chaikinanalytics.com/blueprint, and this offer expires midnight Sunday, October 15th. Or you can email sales@chaikinanalytics.com or call the number on the screen. And I know Josh is going to put a link to the fulfillment page in the chat Q&A box now. Now, in addition to everything we've talked about, you get our intraday charts, so you don't have to run off to another charting service to see what's going on intraday. Our earnings alerts in detail and my weekly market insights with those bullish or bearish stocks that we just went through. Plus, when you subscribe to Chaikin Analytics, you get tutorials to help you learn all the features and benefits of Chaikin Analytics. Unlimited coaching and support. If you need it, one-on-one coaching. And my colleague John Schlitz's daily morning insights that come to your inbox before the opening, so you don't have to stay glued to CNBC to know what's been going on in the overnight markets or the pre-markets. Now, one final testimonial from Ken H., who actually took advantage of the one-on-one coaching with Josh, who's hosting the webinar tonight. From 235,000 to 1.2 million in 7 months. I've been trading stock options for many years with not much success. On January 4th of 17, I found your system. I started the year with 235,000. As of today, which was July 30th, my net liquidation value, 1,205,000. I would not have been able to do this without your system. So you too can take advantage of it, and to give you the most compelling offer I can possibly give you, if you subscribe by midnight tonight, an additional $100 off. That's a total of $400 discount, reducing the cost to $17.95. And as a special fast action bonus for the first 10 people who subscribe tonight, you get a free one-on-one half-hour phone call with me after you've subscribed, been through the onboarding process to make it as valuable as possible. So subscribe tonight by midnight, $17.95, $400 off for the first 10 people who subscribe tonight, a free one-on-one phone call. So with that, I'd like to thank everybody for staying with us. I hope we've delivered on our promise to teach you some of the ins and outs of successful options and swing trading. And Larry, if you're still around and want to say a couple of final words, we'd appreciate it.
Yeah, I'm still here. It was a great seminar. I just want to ask you one question, Mark. These guys on TV, the supposed option guys, they always do spreads. I mean, I don't really do spreads unless there's a theoretical option value reason for doing them. When you're recommending your buys and sells, do you do spreads, or are you just doing straight out puts and calls?
No, we're actually recommending vertical puts or call spreads. Nothing too fancy. You're not talking about straddles or strangles or collars or this or that, but it just reduces the cost. The option you're selling reduces the cost, and day in and day out, week in and week out, you get a better risk reward ratio. Now you give up the big play. If a stock's going to go up 50% or drop 50%, but most people don't give themselves enough time to do that anyway. So we like the vertical put or call spreads. I'll give you an example. Facebook, when we recommended it a week and a half ago, we recommended a vertical call spread similar to the one we just looked at. Facebook is up 2.5 points, and that spread is up 15%. If you bought the call option outright, you'd be flat or losing money. But with the spread, because the option you're selling is, reducing your cost, 15% gain on a just 2.5 point move so far in Facebook. So we like that, and you can always buy the option outright if you've got a strong conviction. But the spread gives you a bit of a better risk-reward ratio.
All right. Well, thanks for spending the time, and I'm sure everyone learned something. So I guess, are we done here?
I'm going to hand it back over to Josh Minland to wrap up the webinar. Thank you, Larry, for the opportunity to share this with your community, and hope to do it again.
All right. Sure. See you.
Thank you, Larry. Thank you, Mark. Everybody in the chat window, you can take advantage of this offer and get a one-on-one with Mark, which is fantastic. The discount code will automatically be applied. You can go to www.chaikinalytics.com/blueprint, or you can give us a call, 877-697-6783. Again, that's in the chat window, up for another few more seconds now. We can get you on an onboard. We have a great process to get you up and running, and we teach options. So we can teach you all about those wonderful verticals that Mark was talking about. Thank you all for attending, and look forward to seeing you soon.